Hello traders, it's Sunday evening. I'm doing some market analysis so that I can set up my week. It's September 20th. Let's take a look at the market. This is a very long-term perspective of the S&P 500 monthly chart. You can see how we have this upward sloping trend line, and the SPY got up to that trend line, and we had a long green candle closing on its high, very encouraging, breakout to a new all-time high. However, look at this next candle. This is what's happening in the month of September so far. The month has not completed, but there's a good chance that this could be a bearish engulfing pattern on a monthly basis. Always important to put current price movement into context by looking longer term as well. So I see this as a resistance point, and when you get an immediate reversal off of a relative high like that, that's usually a sign that there is profit taking, that you're going to be seeing a sell-off. So let's go into the weekly chart, see what that looks like. Also, you can see that breakout right here at about 337.50 on the SPY. Nice breakout there. Again, this is a weekly chart. Now that breakout bar completely reverses, and in fact, big range off of that bar also. Long tails up and down, and we're starting to see some follow through on the downside with some longer tails above body. That is bearish, plus this is what I would call a failed breakout. That also tells me that there could be more selling on the downside. And we're going to go into a daily chart now. And this you've probably all seen. Here I'm going to draw an upward sloping trend line. We're going to connect this low with that low, and we're going to extend that line. And you can see that we've had a breakdown. This was the bullish climax that we saw in the weekly and monthly chart, and that is the follow-through selling. Now, if this bounce had taken a long time to unfold, 2 or 3 weeks, and we're gradually bumping higher, then that would have been buyers scooping stocks after this little drop. But if we had a tiny muted bounce and then immediately selling, which is exactly what we've seen, that tells us that prices are going lower. So I believe that we're going to see follow through selling this week. I'm not going to get into a lot of fundamental analysis, but I think there are also some fundamental reasons why we might see the market pull back. So let's put up some major moving averages here. The one that came into play Friday was the 50-day moving average. You can see how we're bumping along that level, and we closed below it Friday. I view that as bearish. I'm going to put up the 100-day moving average because that is a possible target. You can see it comes into play around 318 on the SPY. I believe that that is a possible resting point for the market. That may be a support level for the market. Here you can see this high, and that comes into play at roughly 323.40 on the SPY. That could be our first resting point. So those are some critical support levels to watch. Currently, as I record this, the S&P futures are down about 13 points overnight. So if we take a look at where the SPY closed on Friday, you can see we got this little bounce late in the day. I believe that we're going to be opening right around the low from Friday. So additional selling coming into play. If you're a short-term trader who is able to watch the market during the day, I think there's going to be an opportunity for you to short some stocks this week. And I say that you've got to be very short-term because the longer-term market trend is upward on a monthly basis, it's upward on a weekly basis, it's upward on a 5-month basis. That means that when you get these market pullbacks, the snapback rallies can be very, very violent. If out of the blue someone comes in and says, hey, there's going to be a $2 trillion stimulus package, look out because you're going to lose a ton of money if you can't watch the market intraday on a move higher. So let's take a look at some stocks that look particularly weak to me. I believe that we're going to see some selling this week, so I wanted to find a few stocks that I can home in on, maybe put a game plan together on some of them. So I ran a search, and very easy search. So I'm looking for stocks that have a bearish trade signal, and you can see that that's marked right here on a daily basis. I'm using the option Stalker custom search. And here you can see strength versus SPY. Because I've got the red box marked, that means I'm looking for a stock that is weak relative to the market. You'll also notice that I've marked stock is below prior day low. I want to make sure that when the market sold off on Friday, that we've got a stock that also has been able to get below its prior day low. That would tell me that there's additional weakness. Finally, I want to make sure that the stock is below the 50-day moving average. Why? Because the SPY closed below its 50-day moving average, so I want to make sure that at very minimum it has that type of relative weakness. Now there's one other criteria that I've marked. I want some really good option liquidity. And look what came up on the list. And if you look through this list, you'll see Apple, Amazon, Google. It's going to be very hard for the market to rally without three major mega cap tech stocks. So we're going to be taking a look at each one of them. And in the heavy selling search from last Friday, you can also see Amazon, Google, Qualcomm, Apple. You can see some of the other stocks that are really starting to show some signs of weakness. So I'm going to move this off screen. I'm going to click through the charts and we're going to look for stocks that present a good opportunity to us. Now this is a long-term upward sloping trend line that I've drawn on Apple. And if I go back to that initial low point, you can see this dates all the way back to March. And then we had another nice little drop right there that we could connect that to. Let's zoom out and take a look at that long-term picture. Look at that powerful trend line. And do you see how well the market mirrored that trend line? When you see something that conforms this perfectly and you're looking at charts, you want to make sure that you are always taking 2 extra seconds to draw that trend line because it is very important. If you see it, every other trader is going to see it. And that's what makes it relevant. So make sure that you're dropping these trend lines and these alert lines so that when critical price points are breached, all of a sudden you'll start getting pop-ups and the trades will be delivered to you on a silver platter. If you look at the price action from last Friday, you can see how Apple just barely grazed it and then bounced off of that level. If we see additional selling this week and this upward sloping trend line is breached on Apple, I believe that it has a chance to go down and test the 100-day moving average. The one thing about Apple also is they had their first virtual conference where they released new products. What a yawner. No one really was too interested in that news. And let's go into the daily chart again, and you can see that conference was during the week. We saw selling afterwards. Well, that's not a good sign. You can see on Friday how Apple closed below that 50-day moving average. It actually closed below it on Thursday. Friday, it confirmed that it was breaching that 50-day moving average. I think that Apple is going to continue to decline. You've got good volume on the sell-off. You also have the 10P indicator. Yes, we can use it for stocks as well. You can see how it crested and rolled over and how the stock has actually been responding to it. So we have a number of reasons to think that Apple could move lower. How would I play it? And this is going to be the trade that I highlight this evening. I'm going to be looking for a short on Apple. It's got to get through this 106 price point right here. And that is where the upward sloping trend line comes in. So if Apple is below $106, the way that I would play it, I would be looking for some in the money, very short term options that have a very high delta to them. So I'd probably be buying something like the 110 puts, and we can go in and take a look at where those are trading. I'm going in the money because I don't want to pay a lot of implied volatility for these, and I want to make sure that the delta is fairly high. I plan on being in, and I plan on being out of these options very quickly. On the way down, I'm going to take small profits and be relatively passive because my longer term perspective is that once the market finds support, I'm going to be a fairly aggressive buyer on a swing trading basis. So as a short term trader, I'm just trying to take advantage of some short term price movement on the downside here. So we'll go in and we'll take a look at option pricing and we'll take a look at perhaps the October normal expiration, and which we've got loaded here, October 16th. And let's see where those 110 puts are trading. They are 755 offered. If I click on those, I can see that they've got a delta of 0.56. Not too bad. I may want to go a little bit deeper in the money, get a little bit better delta on those. I could take a look at the 115 puts. And there I can see that my delta jumps to about zero point 0.7. So those are trading currently at about $11. If the stock drops down below that upward sloping trend line, they'll probably be trading somewhere around $11.50. I would only be looking to make about a 30% return on these. I say only. I feel that the stock could get there pretty quickly, especially if the market continues to drop. Now, we've broken a major support level on Friday, that 50-day moving average. Plus, we had 3 tests of that SPY 332 level last week. That has failed, so we've got a horizontal breakdown. We have a breakdown below the 50-day moving average on the SPY. I think that we're going to see it come in. And then also, as I'd mentioned, you've got some of the mega cap tech stocks that have been leading the charge higher are also weak. Going to be really hard for the market to move higher with Google, Microsoft, and Amazon looking so weak. So let's go through the rest of the list, but let me just specify the entry and the exit. First of all, we want to see the SPY making a new low Monday morning. That's September 21st. We want to see a new low on the market an hour after trading. So what we don't want is a knee-jerk little sell-off Monday morning and then an immediate bounce back. We want to see sustained selling. So a new low after the first hour of trading Monday, followed by a breakdown below this upward sloping trend line on Apple. Now, if Apple closes above 106, that's your stop out. Now, it must close above it. That means that 5 minutes before the bell, you're checking Apple. If it's still below 106, you continue to carry that position. You're only looking to make about 30% on this. So if you have a $4 target, I think that would be in line, especially given that we might have to buy those options for $11.50 or so. So that's how I would approach that trade. But let's take a look at some of the other candidates that might be setting up, and you would game plan this similarly. So I'm going to go into Amazon. We'll take a look at that. There you can see that it easily breached that 50-day moving average a couple of days ago. Now on Amazon, to short it, you would need to have it below this 100-day moving average. Until it breaches that support point, I really wouldn't even think about it because it's probably going to bounce off of that level. You can see the 200-day moving average is well below it. This is also a horizontal support level, so you've got that working in favor of a short position as well. Should have found support right there. Testing it, that also comes into play with the 100-day moving average. If Amazon is below it, then you would look to short it. Some traders, instead of buying in the money in the money put options, may opt to sell an out of the money bearish call spread. As long as it's very short term, say no more than 2 weeks or so, and you can sell that bearish call spread above that 50-day moving average right there, I think that would be another decent approach. British Petroleum. You can see how this stock has just continued to drift lower and lower and lower. That looks like a decent short to me also, but it's a grinder. It's not something where you're going to see the bottom fall out of it immediately. CCL. I'm going to go back to a zoomed in view. CCL, you can see how it's below the 100-day moving average and the 50-day moving average. You can see how it's below this gradual upward sloping trend line right here. I think CCL definitely has some more downside potential to it, maybe down to that 1350 level. So I think it could work as well. FSLR, we were shorting this in the chat room on Friday. You can see how it gapped below that upward sloping trend line and right through the 50-day moving average, long red candles closing on their low. I think FSLR works well also down to that 100-day moving average. Google, you can see how it's below the 50-day moving average and it's also below the 100-day moving average. It did that on Friday. Google has not moved a whole lot though. The stock really, I think it's because it's so pricey, it may not get as much action, but the downtrend is very, very strong on it. So I think Google can continue to move lower. This is another stock because the options are so expensive. I would opt to sell an out of the money bearish call spread keying off of that 50-day moving average at about 1,540 would be that price level that I would use. I would use that strike price. If the stock closes above the 100-day moving average, I think you've got to be a little bit careful with it. Certainly, if it gets above the open from Friday, then you're going to start filling this little gap in here. Then you really should be on high alert that you might need to close that down. As long as you're staying 2 weeks and in, time decay will be working in your favor. You just need to have the stock maintain its current level, and every passing day will be working in your favor. The position will be easier and easier to manage. KHC, that is Kraft Heinz. Pretty big breakdown below that 200-day moving average. You can see the selling pressure in here. This would be another candidate. LULU has been a short that we've traded in the chat room also. You can see earnings here. Stock drops right below that 50-day moving average after earnings. Has not been able to come up for air. That is a sign of heavy, persistent selling pressure. Now we're through the 100-day moving average. We're also through this horizontal support level right in there. Actually, that will be the next resting point, is that horizontal support level. So if you're going to short this, you want to make sure that it is below 284.69. Make sure that it can get through that level. If it can, then it's going to have a good shot at getting down to the 200-day moving average at $265 roughly. So Lulu, that looks like a pretty good short also. Pepsi, choppy stock. I wouldn't short this stock. You can see how it just doesn't move anywhere very fast. I wouldn't even sell an out of the money bearish call spread on this because it could be in the money in a heartbeat. And it doesn't carry a lot of option premium, so you would have to go very close to the money. VNQ not going anywhere, no interest. WYNN, Wynn Resorts, you can see how that's dropped below the 100-day moving average and the 50-day moving average. Got a nice little downtrend forming here. This is another one where it's probably going to find support down in here. The stock doesn't have a whole lot of momentum, so I don't know that I would want to trade it one way or the other. I think we have better candidates, and the better candidates are, to recap, Apple. The fact that Apple was not able to get anything going after its event this last week and its new products tells me that the stock is pretty tired up here. Plus, this is a major, major upward sloping trend line that dates back to March. So if that's violated, I would feel very confident that at minimum it's going to test that 100-day moving average. That's why I liked it. Amazon, we looked at. Yes, I think through that 100-day moving average, it starts to gain steam on the downside. So I like that one. FSLR, yes, looks very weak. Should be able to get down to that 100-day moving average easily. Google, through the 100-day moving average, selling an out of the money bearish call spread. I like that. Lulu also looks good. You can see how that selling pressure has been very persistent. It's below the 100-day moving average. If you can get some decent premium, I don't know about the option liquidity, even though Lulu is saying that the options are very liquid. Here again, I would buy options that expire normal expiration, the monthly options in October, but I would go in the money and look for that delta of 0.7 or higher. Don't pay a lot in implied volatility. Try and hang on to it for a couple of days as the market comes in. Take your profits. Look for a 30% profit or so. This stock should be able to get down to that 200-day moving average. Watch the market very, very closely intraday. If the SPY rallies back above the 50-day moving average, all bets are off. You've got to keep your shorts to a bare minimum if that happens. Now, I think we're going to see some continued weakness, but market first, market first, market first. Never take your eye off the market. Every day in the background, I have a chart of the SPY running. I never take my eye off the market, and that is why you have to limit your shorts to very, very short time periods because we are still in a 5-month bull market. We're still in a weekly bull market. We're still in a monthly bull market, so careful on the downside. But things look like they're shaping up to where we're going to see some additional profit taking, and there's your 50-day moving average that we want to stay below on the SPY. I hope this helps you set up your trading week, and I hope it gives you some great ideas for Monday morning. If you like this content, please give it a thumbs up and make sure to sign up for the YouTube channel, subscribe to it, and turn on your notifications so that you never miss one of these videos. Thank you. Good luck. We'll see you tomorrow morning. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.